Silicon Valley Bank was founded by former Bank of America managers Bill Biggerstaff and Robert Medeiros as a bank focused on the needs of startup companies. They came up with the idea over a game of poker. They hired Roger V. Smith, who had previously headed a high-tech lending unit at Wells Fargo, to be the bank's first CEO and president. The bank launched on October 17, 1983, as a wholly owned subsidiary of Silicon Valley Bankshares with 100 initial investors. Its first office was located on North First Street in San Jose. During the 1980s, the bank grew with the local high-tech economy, achieving 21 consecutive quarters of profitability. It went from a loss of $39,000 in 1985 to a profit of $12.3 million in 1991. In 1986, SVB acquired National Intercity Bank of Santa Clara. It opened its first office on the East Coast in 1990, near Boston, to serve the Massachusetts Route 128 Tech Corridor. Under Smith's leadership, the bank diversified into the high-risk real estate loan business, which amounted to 50% of its portfolio by the early 1990s. A slump in the California real estate market resulted in a $2.2 million loss for the bank in 1992, and by 1995 the portfolio percentage had fallen to 10%. In 1993, John C. Dean was appointed CEO, with Smith becoming vice chairman. The bank added a winery lending business in 1994. The wave of computer technology startups during the dot-com bubble provided an influx of business for the bank, which was noted for its willingness to lend to venture-stage companies that were not yet profitable. Among its approximately 2,000 clients in 1995 were networking innovators Cisco Systems and Bay Networks. That year, the bank moved its headquarters from San Jose to Santa Clara. The holding company's stock price soared through the bubble but fell 50% when the bubble burst. The bank continued to add branches and technology hubs across the country. Ken Wilcox became CEO in 2000 and chose to continue the company's niche focus on technology companies rather than diversifying into a broader commercial bank. SVB formally entered the private banking business in 2002, building on prior experience and relationships with wealthy venture capitalists and entrepreneurs. In 2003, the bank sponsored 3 high-profile international trade missions to Bangalore and Mumbai, Tel Aviv, and Shanghai and Beijing, bringing along a delegation of 24 Silicon Valley venture capitalists along to meet with local investors, entrepreneurs, and government officials. As a prelude to opening international offices, it announced an international expansion drive in 2004, with new operations in Bangalore, London, Beijing, and Israel. During the 2007-2008 financial crisis, SVB Financial Group received a $235 million investment from the federal government in exchange for preferred stock and warrants under the Troubled Asset Relief Program over 2 years. It paid $10 million in dividends to the U.S. Treasury, then used the proceeds of a $300 million stock sale to buy back the government's interest. Greg Becker replaced Wilcox as CEO in April 2011. SVB partnered with Shanghai Pudong Development Bank in 2012 to create a separate Shanghai-based bank, SPD Silicon Valley Bank, to lend to local technology startups. The new bank, owned 50/50 by the two companies, received approval from Chinese bank regulators to operate in renminbi, making it one of a handful of American-owned banks permitted to do so. SVB also managed 2 local yuan-denominated funds for Shanghai's Yanpu district government and invested in a Hangzhou-based loan guarantee company. In 2015, the bank stated that it served 65% of all U.S. startups. Its new offerings at the time included syndicated loans and foreign currency management, and it stood out as the only U.S. financial institution then working with virtual currency startups. SVB was the finance partner during the launch of Stripe's Atlas platform in February 2016 to help startups register as U.S. corporations. SVB's involvement in financing acquisitions for startups gave it insider information regarding such acquisitions, and in June 2021, Monir Gad, a former senior vice president and director at the bank, pleaded guilty to violating insider trading laws in 2015 and 2016 when he tipped off a friend about 3 startup acquisitions. In 2022, SVB began to incur steep losses following increased interest rates and a major downturn in growth in the tech industry, where the bank's liabilities were heavily concentrated. As of December 31, 2022, SVB had mark-to-market accounting unrealized losses in excess of $15 billion for securities held to maturity. In early March of 2023, a combination of factors, including poor risk management and a bank run driven by tech industry investors, caused the bank to collapse. Use of social media was reported to be a factor in both the initial bank run and its aftermath, with those affected by the potential loss of deposits calling for regulators to ensure that uninsured accounts were made whole. Early in the morning of March 10, examiners from the Federal Reserve and the FDIC arrived at the offices of SVB to assess the company's finances. Several hours later, the California Department of Financial Protection and Innovation issued an order taking possession of SVB, citing inadequate liquidity and insolvency, and appointed the FDIC as receiver. The FDIC then established the Deposit Insurance National Bank, the Deposit Insurance National Bank of Santa Clara, to reopen the bank's branches the following Monday and enable access to insured deposits. The CEO of Silicon Valley Bank, Greg Becker, was previously on the board of directors at the Federal Reserve Bank of San Francisco, but exited that position. On March 13, 2023, the FDIC transferred SVB assets to a new bridge bank, Silicon Valley Bridge Bank, N.A., and appointed Tim Mayopoulos as CEO. Regulatory filings from December 2022 estimated that more than 85% of deposits were uninsured.